Hey guys, so in this video we're going to be looking at the application of what makes a good supply and demand level, and I've got some examples marked up here, so we're just going to go through those. Okay, so starting on the 4 hour, we come up and break this swing high. We then push down, breaking this low here, which is the internal low, creating this supply here. But then we come down into this demand, price then pushes up, sweeps this high and flips the demand. So this has already 3 boxes ticked because it broke structure here as well. So we've got break structure, flips and sweeps. Price then comes down, pushes up, creates the inducement for this supply. So now we've got all 4 boxes ticked. Obviously we don't need all 4 boxes, but it's a very, very good confluence to have all 4. So we've got flip, sweep, inducement, break structure. Okay, so we then come down, tapping into demand here, pulling back and then breaking structure and flipping this demand. So this supply then holds, taps in here and then pushes down. So this supply breaks this structure here, which is, it's not enough to be classed as swing structure, but it is internal structure or external structure, but it is a low. So this supply is valid. We then push up into here, come down and fail to put in a new low. This high then gets taken, and as you can see we have these buy to sell wicks here which get induced by this high. So this high is actually inducement for this, which gets respected. So as soon as we see this respected, we can then look for a supply to trade from, and what happens is price comes down, breaking this structure here. This supply is what broke structure, so as soon as we tap into this we can look to trade. So we look for a short from here, taking it down to the swing low. As you can see, we come down, break structure again, creating this supply. This supply has inducement in the form of this high here, which then comes up, we take out these early sellers and then we can look to trade from this down to this swing low here. Okay, coming up we can see that we tap into this supply range, pull back and break through, and after the breakthrough we can see that these wicks here were respected. These are demand wicks, but before we tapped into this we actually created this low here which pulls up, sweeps into the demand and then pushes up, breaking structure. So we got this demand created here from the sweep and the break, and then we get some inducement created for this, which then comes down, taps in and runs. So this would be a very nice trade as well to trade from, or a very nice level to trade from. So sweep, break of structure, inducement. Price then comes up, taps into some supply here. I wouldn't look to trade from this because you could look to trade from this because it taps in, pulls back and then breaks. But if you look closely, this supply had already failed by the time this broke. But there is sort of a demand chain forming here. So this candle sweeps this candle's low. Or is that equal? Let me see. So the low of this candle is 2.2 and the low of this one is 2.5. Okay, yeah, so there was no sweep here. So we just got a demand chain forming here up into this supply. Price then comes down, pushes up and then sweeps this into some demand here and then pushes up, flips this supply, and as you can see we get some inducement created, try to push up, come down, sweeping this into this demand that swept, flipped and broke structure. So this is a very nice level as well, and ultimately we come back into this supply from earlier which flipped, swept, has inducement and broke structure. So yeah, it's just applying these 4 rules to each supply and demand zone to see how many boxes it ticks, and obviously the more boxes it ticks the better of a level it is to trade from. And yeah, I hope this video helped a bit, and thanks.